Good day, my name's Warren Davison and I'll be taking you through the PSG Wealth Offshore Fund update for April. Looking back at markets in April, developed market equities gained with the US leading the way, buoyed by the swift vaccine rollout and fiscal stimulus measures. Looking at US equities, they made solid gains in April. Economic data was encouraging all over. The gain was led by the services sector, signaling the best uptick since 2014. Consumer confidence, while still below the pre-pandemic level, also rose strongly. Emerging market shares saw positive returns but lagged developed markets. The pandemic continues to be a major concern in several emerging markets, notably India. Commodities gained, with agricultural the best performing index component. Looking at fixed income, the sharp sell-off in US government bonds came to a halt in April, helped by comments from the Federal Reserve. European yields rose, meaning their prices fell. The continuing diverge from the US due to the rising growth and inflation expectations. With continued optimism over the economic recovery, corporate and emerging market bonds performed well and the US dollar weakened. Looking at the PSG Wealth Solutions and focusing on the offshore side, here I show a month-on-month growth in AUM for the offshore solutions. April was another strong month, with the AUM ending at 2.23 billion. Over the month, we reached a milestone with the global creator surpassing $1 billion. The peer group rankings remain strong across the board, with the longer-term numbers producing favorable results. As we can see, all of our funds have produced average and above performance over their recommended holding period, illustrated by the dark borders. Another summary here shows how the funds have performed over the 5-year rolling period. We can see that 3 out of the 4 funds are in the first quartile, with the global moderate being in the second. We can see over the period that the global preserver outperformed the sector by 81% of the time, the global moderate 38% of the time, and the global flexible and global creator outperformed 100% of the time. As you can see, we've also included the 1 year ago rank compared to the current to see how the funds have progressed. Looking at some short-term highlights. Over the 1 month, equities bounced back strongly, and this is reflected in the underlying manager performance as well. Those managers which have higher equity allocations and a more aggressive stance outperformed their peers, whereas the bottom performers for the month were the more defensive players, lagging. Looking at the outperforming funds over the 3-year period, here we can still see majority of our underlying managers have still maintained outperformance against their respective peers. Looking at the individual fund performance. For the global preserver, the fund produced 1.54% return in April, outperforming the sector by 19 basis points. The fund remains above the sector over the recommended 3-year holding period, as well as since inception. As you can see on the bottom, the fund has outperformed the sector average 81% of the time on a rolling 3-year basis since inception. The fund has also achieved an average excess return of 97 basis points per annum over that 3-year rolling period since inception. For the global moderate, the fund saw big growth in the month, climbing 3.18%. The fund also outperformed the custom moderate allocation by 16 basis points over its 1-month period, 27 basis points over the holding 5-year period, and 31 basis points since inception on an annualized basis. The fund remains well in the second quartile, and as you can see on the bottom, the fund has outperformed 40% of the time on a rolling 5-year basis since inception, and has achieved an excess return of 14 basis points over that period respectively. For the global flexible, the fund also saw big growth in the month, producing 3.84%. The fund maintained its alpha of 5.89% over the recommended 7-year holding period, as well as 6.18% over that since inception period. The fund maintains its first quartile rank over all the periods and has outperformed the sector average 100% of the time over that 5-year rolling basis period. The fund has also managed to achieve an average excess return of 4.31% per annum on a rolling 5-year basis. For the global creator, the fund saw growth of 6.41% in April, outperforming the sector average by 208 basis points. The fund remains above the sector average over its 7-year holding period as well as since inception. Looking at the rankings, you can see the fund remains first quartile across the board. The fund has also outperformed the sector average 100% of the time on a rolling 5-year basis since inception, and has managed to achieve an average excess return of 2.92% per annum on that rolling 5-year basis. As a conclusion, to tie it all together, we can see here that the PSG Wealth multi-management team is achieving their 3-pillar objective of consistent above-average performance at below-average risk and at a competitive price. Thank you. Please take note of the following disclaimer, and if there are any questions, please feel free to reach out.